Hey everyone, welcome to today's video. So in the last few trading sessions, Tata Chemicals has been rallying like crazy. So in the last few days, the Tata Chemicals stock has grown from less than 1,000 to more than 1,300, which is more than 30% gain in mere a week. But what are the actual reasons behind this rally? And is this going to be the next multi-bagger? So let's get into it. So the first and foremost, the speculation that has been done in the market is the stock is rallying because the Tata Sons is going to have an IPO in the upcoming 12 to 24 months, which is 1 to 2 years. And you might have seen these kind of news which are flooding over that because the Tata Sons IPO is going to come, speculations are that Tata Chemicals is one of the stock that have given this much rally. Moreover, RBI has classified the company as an upper layer NBFC, and hence it could list within next 12 to 24 months in the market. But the thing is, this is a news-based strategy. Now, there are the two key factors that I want to talk about. First is the fundamental growth of the company, and second, what is the business is about. So, if we look at the business of the Tata Chemicals, it is not a specialty chemical businesses, but it is into chemicals businesses, which is more of a commodity business. Well, let's discuss in brief what is the difference between a chemical and a specialty chemical business. So if we look at the chemical business, it typically involves around the production of basic chemicals, which is more of a commodity business. For example, like sulfuric acid, etc. And these chemicals are the raw materials for various industries, which include agriculture, manufacturing, etc. But if we have a look at the specialty chemical business, we'll see that it focuses more on producing high value specialized chemicals with specific applications. And these chemicals are tailored to meet the unique requirements of the industries such as pharmaceuticals, electronics, cosmetics, agrochemicals, etc. One thing to note here is that unlike the commodity business, specialty chemical business commands higher margins and often require advanced technology and expertise for production. Given all these facts, Tata Chemicals is more into the commodity business, and the revenue growth do not justify this rally, at least in the long term. In the short term, we cannot say anything. Who knows that the stock price can develop in the upcoming weeks. But if we look at the fundamentals and we look at the revenue growth, what is actually happening? So the profit and loss, first, if we see that in the last 12 months, which is the TTM, the compounded profit growth was negative 17%, sales growth were merely 3%, but the stock has given returns of more than 30% in the last few days, which is not at all justified given the fundamentals. Okay, discussing about these couple of points, we got to know that this company is not fundamentally good and may not be good for the long term. But in the short term, it may give high returns. But as investors, it is crucial to not to engage in these kind of stocks just based on the news that has been revolving around a stock. One key disadvantage that people like you and me, which are the retail investors, have that these kind of news is known to us very late. But if we talk about the big players or the people who are into these businesses, these kind of news are known to them very early. And who knows, those people might have made quite a lot of money in this big rally. So our winning chances goes down dramatically trying to find good entry and exit on such kind of stocks. So the thing is to stay away from news-based strategy, but to focus more on the fundamental aspect of a stock. And hence Tata Chemicals, according to me, is not going to prove as a multi-bagger stock because of its weak fundamentals in the long term. So that's it for today's video. See you in the next one.